All right, everyone, it's Serge Berger here. Welcome to another one of our webinars here in the webinar series. Before we get started, as always, I want to do a real quick audio and visual check. If you can both hear me and you can see the correct screen, you should be able to see a chart of the S&P 500. If you quickly type in a yes or a plus into the chat box. All right, very good. Excellent. Well, I hope everyone is doing well today. We are going to be talking about swing trading, and what we have here is about three. I think we have three different webinars planned for this theme. So what we're going to talk about here first today is a little bit the technical analysis overlay. So this is a little bit like last time. We basically have sort of a coming together of different technical analysis methods and things we've talked about over the past throughout this webinar series so far. So what we want to talk about today is how we tie this all together into a sort of swing trading analysis type of approach. What we're going to talk about first of all, though, is what is swing trading. We're going to define what that means. I want to take at least half of today to talk about what that actually means, and then we will talk about we'll do some real-time market analysis. Looking at the markets, we're going to look at the broader indices, the S&P 500 here, as you can see, as well as some other things that you guys may want to look at. Okay. So before we get started, let me just quickly remind you, this is the chart of the S&P 500. And when we had our last webinar last Friday, we were very much still stuck in this trading range here. And we talked about having to be open-minded as to which direction the next near-term move is going to be. And you can see that yesterday was Tuesday, January 24th, was, in my opinion, a very, very important trading day. So I told all of my clients and my Clubhouse members, I have a membership program where people receive daily videos from me every single day, new trade ideas, and we do live webinars every single week 2 times. So I told my Clubhouse members, it's called the Clubhouse membership, I told the Clubhouse members that we need to buy a few stocks. Some of the stocks that we talked about were in the materials sector. A couple of stocks were related to just the broader market's general risk on mode. And so we are long a few stocks right now, okay, based on this breakout pattern. So you can see, and I will talk about this much more for the rest of the webinar series that we have. I think we have another 7 or so webinars to go in this webinar series. So you can see that this prediction or this approach that I have of basically waiting and being patient until something actually happens, in this case it finally broke to the upside, is a very, very healthy approach. So yeah, so I don't, Arash has a question. Let me quickly address this. Arash is asking if there's a way to write custom indicators for the Roboforex platform. Arash, it's a very good question. Honestly, I am not sure. I would ask you to please email the people at Roboforex and ask them what the situation is for that. I actually have a custom indicator as well. It's called the B2 reversal indicator. It works amazingly well, and we got a lot of buy signals over the past couple days. And that one is not yet available for this platform, but this is something that if you're interested in, you can always get in touch with me, and we will figure something out to maybe make it available for the platform. I'm not quite sure it's going to work, but it's something I'm thinking about. Okay? So that's to address your question. All right. In terms of the other question, okay, so it sounds like it is possible. I don't know if you can see. I don't know if Arash, if you can see all the, if you can see the, if you can see what ABC Trader is writing right now, but it sounds like it's possible. So thank you for the input there, ABC. Okay. Okay. So again, just to quickly reiterate, the approach that I have, can't make this up. We talked about the market being stuck in a range and us having to be patient, and it's now been, a month and a half, and we had to be patient and wait for the market to finally go in one direction or another. And again, just to quickly reiterate with what we talked about last time, the market over the past week, a month and a half, had a lot of opportunity to push lower. And you can see that every single dip continued to get bought. The dips had no real strength to them. So, for example, I was short a little bit of stock of JPMorgan, if you might recall, last week, just for a small trade. And I quickly got out of that trade, I believe, on Monday or even last Friday. I can't remember. But I got out of that short position because the stock just didn't continue to push lower. So let me show you what that means. Okay, so let's quickly look at JPMorgan. There we go. And you can see how easy it is to look up the ticker symbols here on the Roboforex platform. So I was short. I got out of it on this day here, which was, I guess that was Monday, this Monday. Just because the stock, you can see it just had no follow through to the downside. There's only one day of weakness, and that was it. So I'm happy to reshort the stock if we ever see it go lower again, if it starts to give us some follow through selling, but we're just not seeing any right now. Okay, and it's the same thing that happened. Same thing happened in the S&P 500. It just was very resilient, and it just refused to go lower. So I just didn't think. I didn't see a reason to be bearish. One of the most important decisions you can make as a trader, particularly in the stock market, I believe, but I think it holds true in anything, is the decision to either be involved in the market or not involved in the market. So a lot of people think you have to do something every single day. Well, after 20 years of doing this, I can tell you, I think that's very much a dangerous approach to have. The reality is that the stock market goes sideways a lot of times, okay? And so opportunities will come to you, but you have to be patient. You can make a lot of money. So this is the S&P 500. You can make a lot of money in a move like this if you understand how to qualify it, and you understand when to get in fairly early, right? But you can also lose a lot of money in this move, this sideways move. Okay, these are very precarious moves where people tend to overtrade and get rid of a lot of the profits that they made in the previous very nice move. Okay. So now we were patient, and now so far we have, a breakout to the upside of about a 1.5 day long so far. It's not very long, but it's still developing. Okay. Okay. So now let's shift gears a little bit, and let's talk about swing trading and what actually a swing is. Okay. So we have a pretty good example here. This is a swing, but let me just kind of draw it. I took this app here, and I think we're just going to quickly draw what the swing looks like. Okay, so now you're going to have to excuse my potentially awful drawing, but I'm going to give it a try. So let's just say that this is a stock, okay, or it could be an index, or it could be a currency for that matter. It doesn't matter. And you know what? This is already pretty bad. Let's just get rid of that. We're going to make this thicker. 1 second. We'll make it this. And where's the thickness? All right, whatever. I guess it doesn't really matter. Like this. Okay, that's stupid. Here, okay. So let's say this is a stock, and it rallies, it pulls back, maybe it rallies, maybe it has a bad drop, and then it does nothing, and then it goes higher, that kind of thing. Okay. So now each one of these legs is a swing. Okay. With a swing up, a smaller swing lower, a swing higher, then a big swing lower, and then nothing, and then ultimately another swing higher. So each one of these are a swing. Okay, so in this chart, we have 1, 2, 3, 4, 5 swings. This is not a swing down here. This is just sideways markets that we want to ignore or not participate in. Okay, so that is your basic definition of a swing. But let's do a new one. And some swings are taking place, or a lot of swings usually take place within the backdrop of a big picture trend. Okay, and that can be either higher or lower. So let's say we had a stock rallying like this, and it pulls back, then it rallies sharply, maybe pulls back and does nothing, then it goes higher again, that kind of thing. So this is now you have a mother uptrend. Your major uptrend is this thing here, right? That's your mother uptrend. But the stock market doesn't work in a linear fashion, nor does the currency markets, by the way. So you have to understand that a stock market is going to rally, is going to pull back, is going to rally and pull back, and so on and so forth. And the same thing happens on the downside, right? So we can have a market that is selling off, then it bounces a little bit because the sellers get tired, and it sells off again, and then maybe it goes sideways, and then it goes lower again, right? So this is a downtrend. It's the same thing as this. So here too, the mother trend, this thing is lower, right? But the stock market doesn't go lower. The stock market doesn't just drop like this for weeks and weeks and weeks. It bounces, and it comes, and consolidates, and then maybe it goes lower again, and vice versa. Okay, so that's very important to understand, is this this concept that the stock market is not linear. And again, this applies to all markets. This applies to currency markets just as well, which is why it's so important to be patient. And that's why a lot of people don't make money in the stock or the currency markets, because they are not patient, right? So understand that by swing trading, it doesn't necessarily mean that we have to just do a one and done type of trade. Okay, like you just buy it and you just wait for it to get tired. It can also mean that you basically risk manage a longer term trend like this. Okay, does that make sense? So a swing doesn't have to just be very choppy, and see big swings. A swing can also take place within, or swings plural can also take place within a bigger picture, either a bear trend, which is this example here, or a bull trend, which is this big example here on the right hand side. Okay, so that's very important to understand. So a swing can be of any duration. By the way, swing trading works in any time frame. It works intraday. It works in a daily time frame, in the weekly time frame. It really doesn't matter. Okay, so that's your basic definition of a swing, and we will come back to this chart if we have to a little bit later on, if we need to refresh on the concept. So let's look at the S&P 500 and see if we can determine a few swings. And this is actually the chart how we left it last Friday. And you can see that we have some very well-defined swings. We've had one swing higher, right? Then we consolidated, another swing lower, then we consolidated, another swing higher, consolidation, a swing higher, then a swing lower, and a swing higher again. Okay, So, and now maybe we're seeing another swing to the upside. Okay. So, but here too, you can actually see that if we apply a little bit of multi-time frame analysis, the stock market since early 2016 has been in a new uptrend. So these pullbacks, this pullback, and this consolidation period, these were just kind of, consolidation swings, which is a term that I'm just kind of inventing right now. But that's exactly what they are in a longer, bigger picture uptrend. In fact, if we make this a weekly chart for a minute, okay, you can see that the S&P 500, and again, we can look at single name stocks as well. Oops, let me just get rid of that. Has been in a major uptrend since the year 2000, and since the year 2009, early 2009. But within this swing, the major upswing, we've seen plenty of downswings, right? These downswings here, and then even here when the market became very, very trendy throughout 2013 and 2014, even here we had pullbacks all over the place, right? And these are also called swings. Okay, so the swings, generally speaking, tend to be smaller when you have a very strong trend, a strong uptrend or a strong downtrend. Okay, so that's a strong uptrend. Let me quickly show you a strong downtrend for just a minute so you can see what that looks like. Let me go over to the chart of Walmart, and you can see here too here is a strong downtrend in shares of Walmart, and here we almost had no swings at all. It was just on the weekly chart. If we go into the daily chart, oops, that's the hourly chart, 1 day. Let's zoom out. Okay, you can see that yes, there were some bounces, but they were not very big. So that's what I'm trying to tell you. If a trend is very, very strong, either to the upside or to the downside, the swings tend to be somewhat smaller or potentially very small. So let's go back to the S&P 500 because we had a good example here. So you can see that the strong moves to the upside, which are swings in and of themselves, they don't have very big swings within them. But if you zoom out and you understand that, for example, the S&P 500 here in 2013 and 14, had a very strong trend, so there were very small swings, except for this one here, which was the October 2014. I remember it well. But then the market got into this very big sideways move, so the swings here tend to be larger. Which makes sense, right? Because basically these sideways swings, they basically just show us that the market is volatile. So volatility can certainly happen in any market environment, and you can hear this pullback here was volatile, but it happened towards the back end or the latter fifth of the entire trend, which makes a lot of sense. So this consolidation period, some people have called it a bear market that we had for the past, let's call it 2 years or so, or maybe the past. Maybe not 2 years, but let's say from last November, looking back, 20 months or something like that. So again, that's an important concept to understand, that the market isn't always going to be the same volatile, but in fact, when we have these sideways motions, the market tends to be more volatile than when you have a directional move. Okay, so now let's take this another step further, and let's talk a little bit more about what this means in terms of the type of strategies that we can apply. So let me give you a good example right now. and talk a little bit more about actually, you know what, let's first do this. Let's stay with the S&P 500 for just a minute. Let's understand that, you know, swings, if they are of good quality, they tend to give us very good areas of support or resistance for that matter. So let's just stay with the S&P 500. We can look at other charts later on, but let's have a look. So let me draw a very simple trend line here. Well, that's I meant to draw this, or I guess we can draw this as well. So this is your channel to the upside. Looks something like this. Okay. So this is your basic channel to the upside. So you can see there's multiple swings. So since January or since February of 2016, so about 1 year ago, in the S&P 500, we've had multiple swings. That one big one, the first initial reaction. And again, you can see there were very small pullbacks. The pullbacks were very little. Then we had a consolidation phase. We could argue that there was some sort of a dip here, or a swing to the downside. Then we had another swing higher, and then we consolidated in the autumn, and then we had a big rally, of course, to the upside. So those are the swings that have taken place over the past roughly 12 months. But what I want to show you is that the swing lows or swing highs, the important ones, tend to take place at, you know, what we call as confluence support or confluence resistance zones. We talked about what confluence support and resistance zones are, I believe, a couple of webinars ago. So I want to make sure that everyone understands what that actually is. So let me show you again what a confluence support or resistance zone is, and more importantly, how this relates to swing trading and how we can use it in practical application, as opposed to just something that's in theory, you know, because that's something. And let me say this for a minute. A lot of people in the stock market are what I call theorists. You know, they have an idea or a theory about what should happen based on maybe news flow, or based on you know, whatever, you know, thousands of potential criteria that they might be looking at. So like the best example is here. If we talk about the US stock market, the best example is here. This is the rally in November, December of last year after the election results. Well, I personally talk to a lot of investors every single day, and I think I know one that was actually thinking that the stock market would rally if Mr. Trump would get elected. And you know, most people I spoke with at the time said that if we were to see a Trump win, then the stock market would fall apart. And it's these opinions that people have that loses them a lot, that causes them a lot of distress, and ultimately a lot of money. So, you know, the most important thing in the stock market is to remain open-minded, and this holds true for any trading, by the way, whether it's the stock market or the currency market or the commodity futures markets of any sorts. It really doesn't matter. You know, the important thing is to remain open-minded. And so, you know, I personally was quite open-minded, or kind of you know, certainly not emotionally attached to either what the outcome might be, or how the market might react. So once we then saw this, where the hand is right now there on the chart with the cursor, once we saw that take place, it was very clear that we needed to buy the market. And there are some other reasons why we did so, which we can talk about in another webinar. But what I want to talk to you guys about now is to understand that from a swing trading perspective, in the important swing lows and swing highs, a lot of times they have, very similar characteristics. They tend to look quite similar. They're not the same, but they're very similar. And one of the characteristics of important swing lows or highs is that they tend to take place at important confluence support or confluence resistance zones through the lens of technical analysis. Okay, so let's look at these supports and resistance points here for the S&P 500. So you can see the big rally that started in early February, 1 year ago almost exactly. Big rally, and then we had a pullback. Well, look at where the pullback stopped. So this was swing number 1. Okay, then we basically consolidated sideways, and then swing number 2 started at an area that's was technically important through various points. So let me walk you through. First of all, you can see that the 200-day moving average, which is this red line you can see here, the red line, the S&P 500 only broke below that red line for like 1 day. Okay, and then it quickly jumped back above that 200-day moving average. So what that's telling us, or at least what it's telling me, is that this might be an important area to watch. Well, that's number 1. Number 2 is this whole concept of a strong bullish reversal or a strong bearish reversal. And here you can see how quickly the market bounced back higher. It wasn't just a slow move, it was a very, very sharp move back to the upside. So to me, a swing low usually is qualified by not only the amount of different technical indicators that come together, but also how quickly the market goes back in the other direction. Okay, particularly at the lows. So like here too, in last January and February, like I said, about a year ago, you can see that both of those lows, they saw very sharp, very quick turns back up, right? So, and that brings up another point. That's something that I think I discussed. I think I mentioned it last time, or I hope I did. Let's see. The difference between a swing low and a swing high, is a couple things, but primarily it's usually in the way that the market, how forceful the market reacts. And this is very important, guys. I would like for you to write this down, or just listen up very closely. So there's an old saying that goes that bottoms of a swing, they tend to be a point in time. In other words, they don't last very long. And if you look at this chart, you can see that's very true, right? The lows here are events, right? They don't last very long. You have a buying opportunity of, at most a couple, 2-3 days or so, right? So the difference between the lows and the highs of a swing, however, is that the highs tend to be a process. Okay, so the lows are events, right? They tend to happen very quickly, and the tops are processes. So let's think about this for a minute. And there's a specific reason why that is the case. Well, at the bottoms, so both at the lows and near the highs, there are extremes of emotions. And what that means is that down here you have extreme bearishness, extreme fear, and up here you have extreme greed, right? The thing is that greed usually isn't as quickly abandoned as, or greed tends to last a little longer than fear. I guess that's one way of putting it. But the point is, when the stock market sells off, people tend to capitulate very quickly. And just maybe quickly to clarify what that means, capitulation is when people that are long the stock market, they own stocks, right? Most people own stocks. That's the majority of the market participants. They own stocks, right? They don't. Most people don't make a living of shorting the stock market. Most people are long the stock. They own stocks. So naturally, when the market then pulls back, these people who own stocks, they freak out and they sell their stocks. Well, when everyone sells within this time frame that they're concerned about, then that point usually gets reached very quickly, and then the buyers come in. So it's this sort of freaking out on the part of investors or nearer term investors in this case, for this example, that causes these bottoms to happen very quickly. In fact, if we look at the S&P 500 and we go back a little bit more, let's look at the 1 week chart, and we look at the lows here in 2009. Okay, this is early 2009, and this is a weekly chart now. Okay, and you can see that the lows didn't last very long. The lows only lasted, I don't know, whatever, a week and a half or something like that. Now that was a major low, like a multi-year, probably multi-decade low. So that's going to take a little bit more time, but for the most part, you can see that these lows take time. But take that, compare that to the highs, for example, that we had in 2007. Well, these highs in 2007 in the S&P 500, they took some time. You can see there was an entire process here. All this price action here was a process, whereas here this really was more of an event. Okay, I hope that makes sense. I'm not getting a whole lot of feedback just yet from you, but I hope it makes sense, because this is very, very, very important. Okay, so now we've looked at the S&P 500 for a considerable amount of time here. Let's look at some other things. Let me go into a real life example, and for that we can look at the stock called DuPont. It's ticker symbol DD on your Roboforex platform, and DuPont is, in my opinion, looks very interesting right now, right here, for several reasons. So let's just kind of look at DuPont, and you can see very much like the S&P 500, this is a stock that has had a very orderly incline in the sense of its directionality. In other words, it's been pretty much just one move higher. But even here, we've seen some pullbacks, right? So again, look at where the pullbacks are taking place. Like the important swing lows here are taking place at the 200-day moving average, right? It's also from a Fibonacci analysis perspective. If you take the lows here and move it up here, you can see we retraced about 38.2%, which is an important Fibonacci number. Okay, so again, the swing lows are important, and the swing highs for that matter as well. That's why I'm a big fan of drawing very simple lines. So like, for example, for a stock like DuPont, I look at this and I draw some very simple lines, and to me the simple lines look like this, right? That's your resistance line right now. So to me personally, I actually like this stock to the upside, but I would be concerned about this stock on the upside if it starts rallying much more without pausing, right? So I guess that's kind of the bigger picture way of looking at a stock like this. So yesterday, by the way, we had the materials sector perform very well, and for those of you that are not yet on my free newsletter, I would encourage you to do so. You can just go to thesteadytrader.com and sign up for those my free daily emails. And then we can work on that going forward. But look at the XLB. So let me make this a weekly chart, and I want you to understand what happened here. So again, let's look at it from a swing trading perspective, right, and understand what the swings are. So we had an important swing low take place here. I guess this was probably last February, yeah, exactly. So here too, again, let me just exemplify one more time. You can see the swing lows. Look at where my hand is, the cursor. That was a 1 week event, and probably, in fact, it probably was like a 1 or 2 day event, right? That's where sellers get exhausted in this case. Whereas the topping process, this was a topping process of a couple months, right? For the same reason, it's because buyers tend to get exhausted, but they don't freak out, right? Whereas the sellers, when the people that are long stock, they tend to freak out. The short sellers are people that will freak out if they are short, like down here. But those tend to be mostly professional traders. So the professional crowd, or sometimes it's the day trader crowd that's not very educated yet, but for the most part, short sellers tend to be more people in the know-how. Okay, so again, just wanted to exemplify this. So right now we're looking at XLB, and let's apply a little bit of technical analysis here and kind of look at what this might mean. Well, the XLB, again, this is the materials sector. So this is stocks like DuPont, stocks like Monsanto. I don't know, how many people in here are familiar with those names, but those are important stocks. So what we're seeing now is what's, in my opinion, already been quite a steep move, but we are now attempting to make one more swing higher, right? So there's several ways of looking at this. So here's how I'm looking at it. Okay, so I'm taking my tool up here. This is nice for drawing channels, and I just kind of, I draw it like this. I don't think there's necessarily, oopsie, what did I just do? Okay, that's the wrong page. Nice. Sorry about that, guys. All right, so let me do this one more time without going to the University of Florida website here. So we were doing this, and let me do it a little bit more. There you go. Okay, so this is our basic channel. Whatever, close enough. You can see what I'm talking about here, right? So this is our basic channel, and I do think there's further upside here, right? So I think here we go. That's how I have to do it. All right. So you can see that within this channel we've had several swings. We've had the first initial swing higher, right? Then we had a pullback, then another swing, and another swing higher. Okay. So now what I want you to understand is that if this swing wants to continue, it could go as high as up here to the upper end of what has been an uptrend since early 2016. Right. So now let's apply a little bit more technical analysis and make this a little bit more professional. So first of all, let me go to the daily chart so you can see what this looks like. Okay. Actually, no. Let's go back to the weekly chart so we have a better perspective. Okay. So here's how I'm looking at it. So now, to me, what's very important here is to look at this area of resistance here. It looks something like this. And to me, this was a previous band of resistance that I think was very important, right? And you can see we are now looking to pierce above there, and maybe go to the upper end of that. So in my opinion, there's a new swing that is taking place here, and I want to respect that, right? We can now go in here and look at this chart a little bit more closely, and the way I would look at it from a near-term perspective is that we've had a consolidation phase here, and now we're now breaking higher, right? I don't want to not respect this. And again, your next upside target through maybe a multi-week lens, meaning maybe within the next few weeks at best, this is a best case scenario, would see this stock rise towards the mid 50s, just for an example. Okay, so let me give you another example. Let's look at Alibaba. Has anyone in here ever looked at shares of Alibaba? Ticker symbol is BABA. Is anyone interested in Alibaba as a stock? Okay, all right, good. So let's look at Alibaba. And by the way, I think we talked about it. I talked about it last time. And here, you know, it's a stock that's showing some very good swings. So, in my opinion, you have a very nice swing here. It got exhausted. Then we had another swing lower, and now we're working on a new swing higher. Well, the stock now has already rallied quite a bit. And now, you know, swing trading, let me maybe take a step back for 1 minute and just to make sure everyone understands this. So I look at the markets through a multi-time frame analysis, a multi-time frame lens. What that, for the most part, means is that the swings that we are going to look at have to be put within the right context or the right time frame. Okay, so this swing here was a major swing through a multi-month lens, just like this swing lower here, right? And this swing up here too, this new one that started, I guess when did it start? In late last year. That's also an important swing. But within this swing, we now have, you know, new swings developing. Let me just show you, like this swing here, right? So we had the first swing higher, then we consolidated, and now we have another swing higher. You see that? It's very, very important to understand these different time frames. So now, in my opinion, what we have, and I discussed this with my Clubhouse members this morning, and what we said is that, you know, the stock here gapped higher after earnings. This is yesterday, the Tuesday, January 24th. Alibaba had reported earnings. They had given some good guidance that was, I think, above what some people had expected. And the stock is now looking to make another swing higher within the context of this swing, right? So yes, this here is one swing if you look at it through maybe a multi-week or multi-month lens. However, this here is a new swing if you look at it through a multi-day lens, maybe a multi-week lens at most. Okay, so that's why it's so important to look at this, look at the market, and again, this applies to any market. It applies to stocks, it applies to indices, it applies to currencies, it applies to futures, and whatever else you might be able to trade. Okay, so it's all about this being able to put the swings within their respective time frames and understand, and that way you have a good risk management tool, right? And by the way, we have a webinar coming up, I think in about 2 or 3 webinars from now, where we are going to discuss what I call the open gap trade. Has anyone in here ever heard of the open gap trade? It's something that you can do when the stock market opens, and basically there's either an up or a down gap, and you can then see if that might be something that gets filled. But we will talk about that in a couple of webinars from now. But that's basically what happened yesterday. Okay, so in Alibaba, this is also part of a new swing. So you can see Alibaba gapped higher yesterday. That's this day right here where my hand is right now, the cursor. And what happened is that the stock didn't close at the very highs of the day. You can see it didn't close at the very highs of the day, but it still had a significant gain on the day. Well, today the stock is giving us what, and the trading day is not over, of course. It's only here in New York time. It's only about 12:15, so it's about lunchtime. Okay, so the stock market has another 3 3/4 hours left to go. 2, 3, 4, yeah. So the day is not over, but I like what I'm seeing so far, and that is that we're seeing potential to fall through buying. In fact, you can see today Alibaba is pushing above marginally, not much yet, but marginally above the highs from yesterday. Okay, so this is a new swing in development. Okay, now let me show you how you can, and this is the last thing I want to cover today, is how you can swing trade within the context of a strong trend. Okay, so let's look at this trend here. Let me take this. Let's draw a very simple. Well, let's draw a channel. Let me get rid of this just to clean things up a little bit, and let's draw this. No, it's this. I think we have to go over here. Oh, this one. And we just draw this, a very simple channel like this, roughly speaking. Well, it takes a little bit of time for a trend to establish itself, right? Happen overnight. So, to me, I need at least 2 points, 2 reference points in order to be able to draw a parallel. I mean, it's physically impossible to do so otherwise. So here we had a high, then we had another lower high and key day here. This was last November, I guess. Whatever, doesn't matter. The point is that at this point we could start drawing a channel. So the sooner you can draw a channel, the better. So as soon as you have 2 valid, points, and for me it would have been this one here, and then ultimately this one, because this was clearly a rejection of the highs. So you then can draw parallels, and you can just extend them down as long as you want. Okay, I hope this is making sense, guys. This is very important. So now that you know that you have a defined, set of highs or lows in this case, well, highs, a high here, a low here, and a high here, you can start drawing this channel. So now every time this stock drops to the lower end of the channel, which again, all I had to do is take this tool and draw it like this. So all I did is I took these 2 points, right, like this. Let me show you. So we just took these 2 points and we just basically, extended it, right? And you can then extend it this way to infinity, right? So then every time this stock gets to the lower end of that trend, you want to look for a potential buy, for a potential, legging into a new swing, right? So maybe you were short this stock, Alibaba, because of this strong bearish reversal. That's a huge outside day from a candle perspective. So then when it gets to the lower end of this, and it usually tends to overshoot a little bit. It's not an exact science. Remember, guys, this is just it's just an approximation, or it's all a risk management exercise. So once we get to the lower end, you can then look for a bullish reversal, which in this case took place. The stock didn't rally very long, but it then once again got to the upper end of the range, because this was a quite steep sell-off, and then back to the low. So to me, there were not many trades to do here, or not. Well, there were some to do, but they weren't very good results. Like this was the only one that was really good. Bearish reversal at the upper end of trend, and then a new swing proceeded to the downside. This one here, you would not have made much, if any, money at all. But anyway, but the point is then, so this is this swing, and then you start a new swing here, right? So to me, Alibaba, and again, we talked about this with Clubhouse members. I showed them that we thought that Alibaba is getting into a new swing to the upside. So sure enough, Alibaba consolidated for a few days, had one buying day and a big follow through buying day in here in early January. Then it rallied for a few more days. It started going sideways, and then it gapped higher one more time yesterday. Okay, so again, what's important, what I'm trying to teach you here, is that the earlier you can detect these swings, the better, right? The earlier you can catch them. That's why it's so important to constantly draw these lines, look at the market through a multi-time frame analysis lens, set alerts. That's a big thing for me. I set maybe, I don't know, at least 5, sometimes 10 or more alerts every single day for when a stock or an index or a currency or a futures contract gets to a level of interest for me. That's really, in my opinion, the way to approach this market. So, I'll finish this off today with having one more look at the broader indices, and I'll tell you, I actually just sent out just before we started the webinar, my daily free email today that goes out to a lot of people. We talked about a potential breakout in the Russell 2000. Okay, so like if you go to my website, thesteadytrader.com, then you would see. You can see that video, and let me just let me make this channel just to remain consistent. Look something like this. Okay. So I think the Russell 2000 right now could be moving into a new upswing. Okay, so a swing to the upside after having been in a consolidation phase. We can also call this a bull flag pattern, by the way. Some people call that a bull flag pattern. I entirely think it's possible that we could see about 140 on this ETF representing the Russell 2000. So again, I'm just wanted to wind down this session today on swing trading, which I think was there was quite a lot of information in here today. Hoping it was a lot of good information. So what we are going to do in the next webinar is we are going to talk about swing trading at a little bit more of an advanced level. So today we just kind of went through the basics of understanding what is a swing, how we can identify one. Next time we're going to go through much more live market analysis. I want to analyze the market live with you. So today we mostly focus on the S&P 500. Here is one thing I'm looking at right now. Again, the Russell 2000, and yeah, so that's what we're going to talk about next time. Take it another little bit of a notch higher, and I believe with that we're going to wrap it up. Unless you guys are there any more questions, or are we good? I'll give you another few seconds to type in any questions if you have any. Otherwise, we will wrap it up here. And again, I hope to see you guys on Friday. We are going to talk about much more about like I said, swing trading, taking it a little bit of a notch higher, a little bit of a more advanced level. And cool. All right, guys. Well, thanks so much, and I hope to see you on Friday.